Welcome to today's webinar on debunking year-end tax calculation myths. My name is Ruth and I'm going to be your facilitator for today. Today's topic is on debunking year-end tax calculation myths in Philippines. The webinar will be cut into 5 different parts. The basis of Philippines year-end tax, calculations, what's changing for this year, how to stay compliant, and recommendations. Before we move on to today's webinar, I would like to clear up some housekeeping issues quickly. As a matter of introduction, this webinar series has been prepared by AYP Group, a HR tech and services company with its headquarters in Singapore. We are well positioned with a regional presence that continues to grow in the ASEAN region, particularly across Malaysia, Thailand, Indonesia, Philippines, Vietnam, and Hong Kong. Moving on, as a disclaimer, this webinar series is intended to share with our audience some basic knowledge on year-end tax calculations and, of course, to clear up any doubts they may have. It is not intended to convey any professional advice. You may, however, contact AYP Group directly if you are looking for more in-depth information or tailored advice for your needs. As today's focus is on year-end taxes, we will avoid sidetracking into unrelated HR issues. At the end of the session, we will have a short question and answer. Please use the Q&A feature at any time during this webinar session to ask your questions and like the questions you want to hear the answers to, so that the most popular ones appear at the top. You do not have to wait until the end of the presentation to ask any questions. Recordings of the webinar will be made available after the session is over, and if anyone is experiencing any technical difficulties during the webinar, please don't hesitate to drop us a note via the chat function. So without further ado, our presentation for today has been prepared by our Philippines team. Our speaker is none other than Jordan, who is an AYP Human Resource Tech Consultant. He has 6 years of extensive experience in providing software solutions to add convenience to both companies and consumers' daily work processes. Jordan helps AYP's clients evolve and successfully integrate SASS through JustSolid's HRIS system. Without further ado, I will hand this time over to Jordan to give you today's presentation. Thank you.
Hello everyone, welcome to AYP Group presentation. My name is Dan and I'm here to discuss with you the debunking year-end tax calculation myths. So for us to better understand the year-end tax, we will have some topics for discussion. First topic is the basis of Philippines year-end tax. Here, we will learn the different forms that we need to file and when should we submit it. Next topic is the calculations. So I will teach you how to compute your income tax using its formula. Next topic, what's changing for this year? Are there any new updates or new rules for the computation from our government? Later on, we will check it out. Next topic is the staying compliant. What are the things that we have to look out every time that we are processing our year-end tax? And lastly, our recommendations so that we can help you out in managing your year-end tax for your business and your employees. Okay, so let's proceed with our first topic, which is the basis of Philippines year-end tax. So here, for us to better understand our basis of Philippines year-end tax, we will have our timeline. First, we need the month tax reporting, and it is based on calendar year. It starts from January to December. Monthly tax filing are consolidated during year-end. And when should we prepare? The preparation for alpha list starts on December 1st. So what is alpha list? Alpha list is the alphabetical list of employees who have paid tax in line with Philippine revenue regulations. And who needs to pay? It says here all companies with tax payable for the year should pay on or before January 15. Please note, any payable for this year should be paid by the following year for us to avoid any penalties from the government. Of course, if there are companies that you need to pay, there are also companies who do not need to pay. And these companies are without taxes payable for the year. They don't need to pay, but they still need to file the necessary forms to our government. So let's proceed with the forms that we need to file and when should we submit it. First, we need the December monthly filing, also known as BIR 1601C. And this form should be filed and paid on or before January 15. Also, this is the last monthly filing for the year. Next form is the annual return of income taxes withheld, also known as BIR 1604CF. And this form should be filed on or before January 31st. Next form that we need to file is the Certificate of Compensation Payment or Tax Withheld, also known as BIR 2316. This form should be submitted on or before February 28 with notarized transmittal and DST. So what is DST? It means Documentary Stamp Tax. The BIR 2316 form is used for substitute filing as well. Next form that we need to file is the Annual Income Tax Return for Individual, also known as BIR 1700. This form is submitted by employees that are not qualified for substitute filing or BIR 2316 before April 15. And we have two types of BIR 1700, which is the local and expat employees. For the local employees, it is used to consolidate their earnings from previous employer or multiple employers. And for the expat employees, it is used or it is served as a requirement for 9G visa renewal. Next form that we need to file is the Alpha Lease Schedules, also known as that file and schedules. That file, it is need to be sent before January 31st via email. And schedule is need to be sent before January 31st together with the that file validation email and BIR 1604CF. So there are different forms for the schedule. First one is the Schedule 7.1. It is used for the resigned employees. Schedule 7.4, it is used for the employees with previous employer. Schedule 7.3 for active taxable employees, and Schedule 7.5 for active minimum wage earners employees. So we are done now with the forms that we need to file and when should we submit it. Let's proceed with the calculations. So here, let me share to you the revised withholding tax table, which aligned with tax reform for acceleration and inclusion, also known as train law. It is effective until December 31, 2022. And if you will see on our table, we have the annual income and tax rate. And all employees with minimum wage earner, which earns or with annual income of 250,000 pesos and below, there will be no tax rate. But right now, let's focus more on our third row or category, because this one is, we will use this as our example, the 400,000 pesos to 800,000 pesos annual income. So the tax rate there, which is the 30,000 pesos, that will be the minimum prescribed tax due, plus 25% of excess over 400,000 pesos would be the tax rate. Okay, so let's proceed with the computation or our option on how to compute our tax income. Of course, the first one, which is the easiest way, is using the JustSolid HRMS. So everything on your computation will be automated, and all the forms or reports that you needed will be available here. If you will see on the left side of the screen, we have the company reports. So all of the reports that we needed, like payroll report, annualized report, this is used for the 2316 or BIR 2316, statutory report for the contributions, pay history report, employee report, total payout report, general ledger report or GL report, and of course, the alpha list report. So all of this will be available. You can generate the reports anywhere, anytime you are. So it is a cloud-based solution, so it's very easy. With a single click of your computer, you can generate the necessary forms or report that you needed. Next, let's proceed with the manual computation. So let's go first with the local employee in computing the taxable income. So the formula is gross income, deduct the statutory, deduct the non-taxable income or de minimis. So here with our example employee, the basic salary is 540,000 pesos with allowance of 24,000 pesos. 13-month pay, 45,000 pesos. And the gross salary is 609,000 pesos. So let's proceed with the statutory or contributions, which is SSS, PhilHealth, and HRMS, or also known as Pag-ibig. So let me explain the SSS. So SSS means Social Security System. So the benefit of contributing with this one is that you can apply for a loan for the sickness, maternity, disability, retirement, death, funeral, and salary loan. And for the PhilHealth, this is the Philippines Health Insurance. So most of the health concern will be covered or addressed here in PhilHealth. Next is HDMF, or also known as Pag-ibig. This is the mutual funds for the Philippines. So they have the saving program, and also you can file some loans like calamity loans, home financing, or also known as housing loan, and multi-purpose loan. Okay, so those are our contributions, which is SSS, PhilHealth, and HDMF or Pag-ibig. Okay, so let's proceed with the computation. So the SSS contribution is 9,600, PhilHealth 8,100, and HRMS or Pag-ibig will be 1,200. Okay, so let's proceed with the actual computation. So let's go first, or let's get first the gross salary, which is 609,000 pesos, and we will deduct the statutory, the combination of SSS, PhilHealth, and Pag-ibig. That will be 18,900, and the de minimis or other non-taxable items, which is the allowance and 13-month pay. So we will deduct the 24,000 pesos and deduct the 45,000 pesos for the 13-month pay. So the total income or total taxable income is 521,100. All right, so we already got the taxable income. Let's proceed with the income tax due. How much should we pay to our tax? All right, so here is the formula. We will get the taxable income, deduct the compensation level, multiply the tax rate plus or add the minimum prescribed tax due. So for the taxable income, that will be 521,100, and then we will deduct the compensation level, which is 400,000 pesos. So the total of that one is 121,100. And we will multiply it to the tax rate, which is 25%. So the total is 30,275. And we will add the minimum prescribed tax due, which is 30,000. So the total income tax due that we have to pay is 60,275. So that is the amount that we have to pay to our government as our tax. Okay, so we're done with the local employee in computing the taxable income. So let's proceed with the foreign or expat employees. So if you will see, we have the same formula in computing the taxable income for our expat. Gross income, deduct the statutory, deduct the non-taxable income or de minimis. Same goes by with the income tax due. Taxable income, deduct the compensation level, multiplied by tax rate plus minimum prescribed tax due. If you will see into our graph here or into our table, the only difference is the HDMF or pag-ibig. It is highlighted with yellow. Well, as per the government law, all employers should not deduct pag-ibig contributions to their foreign national employees or expats. So that's the only difference in computing the taxable income from local employees to expat employees. It's almost the same. The only difference is the HDMF. It is not included for our expat employees. Okay, so we are done with our computation. So let's proceed with the non-taxable items and de minimis. So here is an example so that you will be familiarized as well. So first, the non-taxable items and de minimis is the statutory contributions. So this is the one that I have explained just a while ago, the SSS, PhilHealth, and HDMF or pag-ibig. Next non-taxable item is the 13-month pay and bonuses. The ceiling of that one is 90,000 pesos. Next item is the 10 days unused vacation leaves converted to cash. And we also have the medical cash allowance, which is 250 pesos per month. Rice allowance, that will be 2,000 per month. Clothing allowance, that will be 6,000 per year. Laundry allowance, 300 pesos per month. And employee achievement awards, that will be 10,000 pesos per year. Any amount which succeeds here, it will be subject for taxable item. All right, so let's proceed with our next topic, what's changing for this year. So as per the Bureau of Internal Revenue, also known as BAR, they did not release any changes as of yet. So it means we will stick on our current formula or current computation that we have used just a while ago. So there are no changes as of yet. Okay, so let's proceed with our next topic, and compliant. So what are the things that we have to look out every time that we're processing year-end tax? Of course, first, we have to ensure that all earnings are reported correctly. Accuracy is very vital every time that we are processing the year-end tax so that we will avoid any penalties from the government. Next, we have to ensure that correct tax rate is used. I have shown to you the tax table, which aligned with our train law. All we have to do is to follow it accordingly. Next, we have to ensure all tax refund is refunded to employees. And lastly, we have to ensure that all tax payable are settled before the deadline. So what are the consequences? So if we did not follow the year-end tax processing or we computed it correctly, we computed it incorrectly, here is the first consequence. First one, for non-compliance is subject to tax audit of BIR and may incur penalties for unreported earnings. Next, inaccurate amounts will affect the company's income tax return. Next one is the penalties may arise due to incorrect computation. And lastly, multiple amendments are prone to tax audit. Of course, we don't want that to happen into our business. So we are here to help you out to avoid these consequences. So here are our suggestions. We have recommendations. First one, you can outsource a professional payroll management partner. So by outsourcing this one, the year-end tax processing, you can outsource it to the partner or provider who has this knowledge and they've been doing this for years, doing the year-end tax. So later on, I will show to you the advantages doing the outsourcing. Next recommendation, consider engaging on cloud SaaS, or also known as software as a service, HR and payroll system. Later on, I will show you the advantage of this one as well. So let's proceed first with the outsourcing. What are the advantages of outsourcing payroll to a vendor? First one, cost savings. Of course, it will save you money because you don't have to hire a consultant or other employees just to generate or process your year-end tax. So you don't have to worry about the employee's taxes or 30-month pay or benefits. All you have to do is to outsource it, okay? And next, since you are outsourcing it, you can save space and cost of working facility. Third advantage is you will ensure uninterrupted work. Since you are sourcing the year-end tax, you don't have to worry on processing this one, okay? Because year-end tax processing is more on administrative work, wherein you can focus more on the income generating work. Fourth one, time saving and quality assurance. Of course, time saving because you can focus more on your income generating work, and of course the quality assurance, because if you will outsource it, the outsourcing provider or vendor, they're not just double checking it, they triple check everything before they submit or send it back to you. And of course, lastly, compliance. You will stay compliant because outsourcing, they will stick or ensuring everything that we've discussed so that we will stay compliant. Next advantage is subscribing to a HRMS. Since this will be automated, so first one, you will reduce paperwork. So you don't have to do some paperwork just to compute your tax income. So everything will be automated. Second one, central storage and provide a bird's eye view. So it means, so you have the access anytime. If you want to generate the form, if you want to see the details of your year-end tax, you can generate it anywhere, anytime. Okay. Next is updated with legislation change. If there are new updates from the government, it will be automatically applied to the HRMS. Fourth advantages, ready-made tax form. So you don't have to go to the offices or government branches just to get the forms. It will be ready or automatic to our HRMS. And fifth one, options to automate payouts, calculate taxes, and enroll in benefits. Everything will be automated or automatic. In the simple click in your computer, you will have all the data, but with the help of our JustSolid HRMS. So here are the top trends. So the top payroll-related challenges or risks identified by responders with globally mobile employees or expatriates. We have the top three, which is the year-end processing, determination of income tax withholding, reporting of taxable compensation to local employee or local payroll. So if you will see the trend right now, it's focusing more on the year-end tax. Okay, so we are here to help you out, and we can discuss it further if you want to know more how we can help you, since we have this knowledge. We've been doing this for years and we know how it works. So you can email us at ph@ayp-group.com. Also, you can contact us to our phone number, which is +02 7507 2174. Or you can visit our website at www.ayp-group.com. Or if you want to see our HRMS solution, which is the JustSolid, you can visit our website at justsolid.com/phl/. Also, we will have our upcoming webinars episode. This will be on Malaysia. That will be on the 26th of November at 4 p.m. And next is the HR Clinic on December 10 at 4 p.m. If you want to see further of our upcoming webinars, you can visit as well our website, justtalent.com/webinars. And you may like our page and channels in our Facebook, LinkedIn, and YouTube. All right. So we are done with our discussion, the debunking year-end tax calculation myths. I hope you learned something from this one. And thank you so much for sitting with me. My name again is Dan. Thank you so much and have a great day, everyone.
Thank you for the informative presentation, Dan. I'm sure we all have learned something valuable. We had a few questions come in during the presentation which we have yet to answer, and you may continue to send your questions in as we go along. For the next part of this session, we will be taking and answering questions. As you may have noted, we have already answered some questions asked during the presentation in our attempt to answer as many questions as possible. However, we have kept some general questions that we thought our audience may benefit from learning the answer to. So thank you once again for your presentation, Dan. We've had some questions come in. So our first one would be, what is an employee alpha list?
All right, thank you so much, Ruth, for that question. Okay, so the alpha list is the alphabetical list of our employees, including their tax identification numbers, or also known here in the Philippines as TIN. Also, it is included the gross compensation paid by present and the previous employers for the calendar year. And also it includes the taxes deducted from their salaries and computation for their tax refunds and tax payable at the end of the calendar year. So that is the employee alpha list.
Okay, so in regards to substitute filing, who's qualified to do this?
Mhm. Okay, so the employees who are qualified for for the substitute filing, actually all active employees without previous employers. More common examples of which are fresh graduates or can also be new hires that were onboarded within the same taxable year. So there are the employees who are qualified for the substitute filing.
Okay, so if someone is not qualified for substitute filing, what form should they have to submit?
Mhm. Okay, so we can use the form of a BIR 1700, or also known that as annual income tax return form, to consolidate their earnings from their previous employers or secondary employer. So that's the one that we can use, the BIR 1700 or annual income tax return form.
Okay, so our next question is, if my de minimis exceeds the allowable amount, is it still possible to declare it as non-taxable that will be a part of the 90,000 tax exemption for the 13-month pay and other benefits?
Yes, yes. Actually, it's possible. Any amount of de minimis benefits is in excess of the threshold can still be exempt as other benefits, which is another way of fully exhausting the 90,000 pesos tax exemption. So yes, it's possible.
Okay, so when should one receive the tax refund?
All right. So all tax refund should be given not later than February 28th.
All right, so I realized after I filed my taxes that I made a mistake. What can I do to change this?
All right. Okay. So what you can do is you may amend the tax filing and make sure that it is tally with the month filing. And you can file this until every April 15th of the year.
Okay, so are there any benefits to filing taxes early in the Philippines?
Yes, of course. If you will file your tax early, it will gives you time to review and amend any mistake prior to the deadline or settle any amounts that are still due to avoid penalties. Okay, so there are very big benefits if you will file your tax early.
Okay, so are unemployment and government benefits also taxable or are they not?
Okay, so for this one, all government benefits are non-taxable.
Okay, I'm sure people will be happy to hear that. But
Yes, it is.
is there any difference in treatments for locals and expats in regards to this?
Mhm. Okay, so for the treatment, both local and expat employees follow the same compensation tax table in the Philippines. But if you've noticed on my presentation just a while ago, the only difference for the computation is the HDMF. Expat is not included for the HDMF contributions.
Okay, so can I enroll my dependents under my tax registration to help lessen the tax that's payable?
Mhm. So prior to the tax system being amended, yes, it is. But following the new tax scheme, especially now, there are no tax dependents are being considered in the computation anymore. So that's the changes for especially nowadays.
Okay, are there any extensions provided by the government for the submission deadlines in consideration to the current pandemic?
Mhm. Okay, so at the moment, the standard deadline still stands as discussed in the presentation, but it may be important to note that they usually cascade changes days or weeks before the deadline.
Okay, and our final question for today will be, how is commission classified in reference to taxation?
Okay, so for the commission, it is generally being tagged as a taxable item that cannot also be covered under the 90,000 non-taxable limit. So it is tagged as taxable, all the
Okay,
commissions.
okay, so that's all the questions we have for today. Thank you for your time, Jordan, and for all your
Thank you so much,
answers.
Ruth. Mhm.
So, with that being said, we have come to the end of today's session. For the questions that are still unanswered, please rest assured as we will categorize the questions and follow up with an email later on. You may also contact us directly at sales@justtalent.com should you have any additional questions. Thank you for sitting through our session, and we hope that it has given you a clearer perspective on year-end tax calculations. If you enjoyed our session today, please feel free to join our next webinar session of this series. Thank you, and we look forward to seeing you there.